morning to our audience from the African continent and good afternoon to our audience in Singapore. My name is Jean and I'm the Regional Director for West and Central Africa at Enterprise Singapore. For those who are not familiar with us, Enterprise Singapore is an economic agency under Singapore's Ministry of Trade and Industry. One of our mandates is to help Singapore enterprises to expand overseas. To support this mandate, Enterprise Singapore has established 36 offices globally. Within Africa, we have 3 offices and they are in Johannesburg, Nairobi, and Accra, Ghana, where I'm based. Today, we are very excited to have 2 panels lined up where our industry speakers will be sharing about the developments and opportunities in West Africa. This webinar is part of the Africa Singapore Business Forum, which will be held virtually on 23rd and 24th August this year. Before we proceed, here are some general housekeeping for the webinar that we would like to remind our participants on. Everyone is on mute by default, but there is a chat function if you'd like to get in touch with us for technical or admin issues. There's also a Q&A function which you can use to post questions relating to the panel discussion or to our panelists. If you do encounter technical issues, you can try logging out and signing back in. However, if you still face the same issues, you can contact us via the chat function or via the contacts as listed on the slide right now. In terms of today's program, there are 2 panels lined up. The first panel is going to talk about the developments and opportunities across the key markets and sectors in West Africa. There will also be a Q&A session where the panelists will respond to the questions posted by our audience. The second panel is going to deep dive into manufacturing for the region, wrapping up with a Q&A at the end as well. Huda, next slide. So when we look at West Africa makes up the largest population cluster in sub-Saharan Africa, making up 33% of the continent's total population. The region consists of 16 countries with diverse economies and primarily speaks English or French. West Africa is the #1 contributor of Africa's GDP at 28% in 2019. The region is also attractive to foreign direct investment, contributing 24% to Africa's total FDI in 2019, with main investors coming from China, UK, and the US, to name a few. Additionally, the region is home to the largest regional trade bloc on the continent called ECOWAS, made out of 15 West African states that allow the free movement of goods and persons. The 8 francophone countries in the region also form a single currency market called WEMU that is pegged to the euros. Traditionally known as the agri-commodities hub, West Africa is the leading producer of cocoa, with Ivory Coast, Ghana, Nigeria, and Cameroon producing 70% of global output. West Africa also accounts for 49% of global raw cashew production. Other cash crops in the region include rubber, palm nuts, groundnuts, cotton, and shea nuts. The region is resource-rich with an abundance of minerals and metals such as oil and gas, with Nigeria being the leading oil-producing country in Africa. West Africa has also the largest bauxite reserves in the world, and Guinea is the 3rd largest bauxite-producing country. In the area of gold, the region has 3 out of top 5 gold mining countries, namely Ghana, Mali, and Burkina Faso. Additionally, the region also has abundant reserves of other minerals such as diamonds, manganese, iron ore, and phosphate and limestone. With an abundance of natural resources in the region, coupled with the fact that West Africa is the largest consumer base on the continent, estimated at around 26% of Africa's total consumption, it is no wonder that many West African countries are now driving localized manufacturing and agri-processing to take advantage of the region's growing consumption trend. This is further spurred with implementation of the Africa Continental Free Trade Area. Next, there are 6 main key trends that we would like to highlight for the region. The first being economic diversification with a focus on driving localized manufacturing. With the fall of global commodity prices, especially in crude and metals, West African countries are pivoting away from an over-reliance on specific commodities and exploring other potentials in their economies. As such, ECOWAS has set targets for sub-regions that focus on raising local raw materials processing from 15 to 30% by 2030, and also increase manufacturing contribution to their GDP from 7 to 20% by 2030. Various West African governments are also implementing policies, mainly tax-focused incentives across the sub-region to boost local manufacturing, as we're now seeing many West African countries like Ghana and Nigeria vying to be manufacturing hubs for specific product groups like automotive, manufacturing, and pharmaceuticals. The second trend is to push for local content, which started in the region primarily because of the oil and gas sector, but is now being gradually replicated into other sectors of the economies. This is also part of the wider drive to increase localized manufacturing with the Made in Africa agenda of upskilling the youthful population to create more employment opportunities eventually. The third trend is the growing consumer market for retail. With the region's largest consumer market, the region's consumption potential is further fueled by the growing middle class and urbanization rate. Consumer needs are also becoming more sophisticated, with traditional retailers taking more FMCG brands and SKUs that are more expensive. This trend is coupled with an increased mobile penetration that is also further enabling e-commerce and e-services and helping to meet the push for greater financial inclusion and a cash-like society in the sub-region. The fourth trend is the rise in tech adoption and innovation. For the region, developing tech innovations aim at further enabling business growth across the sub-region. A mapping of the startup ecosystem in 2019 identified over 618 tech hubs in Africa, of which 234 were in West Africa. These 234 tech hubs have helped to develop over 1,000 tech startups, and with Nigeria alone contributing around 250 fintech, 100 agri-tech startups, and many others. With the COVID situation, there has also been a sudden surge in health and edtech solutions that we see happening on the ground. The fifth trend is the growing infrastructure sector to meet the region's need. With AFDB estimating that Africa's infrastructure needs are between 130 to 170 billion per year, the West Africa region is trying to ramp up efforts to address infrastructure shortfall across housing, roads, rails, ports, and even power. Additionally, local governments are making efforts to bridge the infrastructure gaps to further enable local manufacturing drive, with the presence of over 30 SEZs, currently 28 more planned across the region. Ivory Coast, for example, has invested Euro 770 million in road infrastructure to facilitate the movement of goods and people to and from its ports. Lastly, West African countries are shifting and building new ties with emerging markets. We see the shift from having traditional relationships with the European and US markets to trading and investment ties emerging with new markets such as China, India, Turkey, and UAE. Nigeria and Ghana are among the top 10 Chinese investment destinations in Africa, with 404 and 192 projects respectively as of January last year. These developing new ties have interest to build and grow industries on the ground like infrastructure, ICT, building and construction for the sub-region. Next. As agriculture accounts for about 21% of West Africa's GDP and employs about 50% of its labor force, the region is focusing its efforts to ramp up localized manufacturing and agri-processing. This is also to leverage the potential growth of intra-Africa trade with the implementation of the ACFTA. Due to the disruption brought about by the COVID pandemic on global supply chain, we see that the region has also been actively stepping up its efforts to localize manufacturing supply to address its local consumption demand. Key manufacturing sectors in West Africa are food and beverage, automotive, oil and gas, and pharmaceutical. Traditionally, West African countries along the coast serve as the main manufacturing and import routes for the landlocked countries. Manufacturing companies are located in the coastal countries due to the easy access to infrastructure such as seaports, connectivity to global supply chain, and sizable local market. Some key players that have entered the region would include Volkswagen's final assembly plant in Ghana, Singapore companies like Olam, who have invested over 200 million US dollars into the sub-region. Other Singapore firms like the Toleram Group and Far East Mercantile are also supporting the region's manufacturing drive by providing much needed infrastructure and supply chain logistics for the sub-region. In Nigeria, Toleram has established the Lagos Free Zone, while Far East Mercantile are further diversifying into logistics and warehousing services for the sub-region by starting with Ghana. Next. In oil and gas, the region accounts for 28% of Africa's total oil production in 2019, with Nigeria being one of the oldest and largest oil producers in Africa. Even though this sector was severely impacted by the recent global oil price crash and COVID-19 pandemic, it is projected to recover with more investor interest and secure over USD 70 billion investments within 2020 and 2030. The deep water and ultra deep water segments is expected to witness significant developments due to increasing tech innovation and rising viability of such operations. New markets such as Gabon and Senegal are actively promoting the development of offshore reserves, especially the deep water and ultra deep water reserves. This in turn is expected to create significant opportunities for operating companies in the near future. Increasingly, as the region aims to raise their share of renewable energy in its overall electricity mix to 35% in 2020 to 48% in 2030, we are also seeing many international firms enter the renewable energy space, especially in countries like Ghana and Senegal. In the downstream space, countries like Nigeria are aggressively trying to increase their capabilities in this area. Plans are still ongoing as well to make Ghana a petroleum hub in the sub-region by 2030. This hub is expected to cost around $60 billion and host facilities such as refineries, petrochemical plants, power plants, light industries, water and waste treatment facilities. In Nigeria, developments are on track for Dangote's integrated refinery and petrochemical complex in the Lekki Free Zones near Lagos. This $18 billion refinery is expected to be the world's biggest single train facility upon commissioning at the end of 2021. In the gas space, huge strides in West Africa's local gas developments points to an increased potential for an energy transition to occur in the region, where gas will displace oil as more sustainable fuel in the regional mix. Nigeria, Ghana, Ivory Coast, and the newest kid on the block, Senegal, are all racing to develop their domestic gas resources, while some others are examining gas imports, either through LNG terminals or the West Africa gas pipeline. Next. West Africa has the largest number of tech unicorns in Africa, with 3 out of its 4 hailing from Nigeria. Sorry, next slide. Sorry, as I was saying, West Africa has the largest number of tech unicorns in Africa, with 3 out of its 4 hailing from Nigeria. Within the fintech space, we have unicorns like InterSwitch, which is Nigeria's first unicorn, followed by the recent addition of Flutterwave. In e-commerce, unicorns like Jumia have developed from Nigeria due to the great interest in its big consumption market, rising consumption trends, and potential in financial inclusion. With the rapid spread of COVID-19 across West Africa, the region has hastened the adoption of mobile financial services. Companies like Jumia are incentivizing customers to use cashless payments for products as traditional brick and mortar businesses move online to continue operations. Similarly, with the rise of mobile penetration, governments are encouraging online e-commerce transactions. We have seen Senegalese government launch a countrywide e-commerce platform for SMEs, which facilitates the distribution of food, hygiene, and health products, and also federates SMEs and encourages more traditional businesses to go online. Adoption of health and education apps have also been accelerated with COVID-19 in the region. Schools and universities are leveraging existing tech platforms like Facebook Live, WhatsApp groups to deliver educational content. Some mobile operators have also zero-rated selected educational mobile apps across Senegal, Nigeria, and Ghana. And we see other trends such as digital health startups in West Africa being adopted more aggressively and deployed to enable healthcare services to still continue. In other key sectors like agriculture, the region has adopted technology solutions to help optimize crop production and enhance the farm-to-table experience. Supply chain logistics are equally becoming important as West African countries look to adopt such technology solutions with its industrialization push. Next slide. Lastly, in the space of built environment or infrastructure, the West Africa's most pressing infrastructure deficits are in the area of power and housing. A McKinsey analysis indicates that Africa's current pipeline of infrastructure projects includes a $2.5 trillion worth of projects estimated to be completed by 2025 across all asset classes. 17% of these are in Nigeria. Within countries like Ghana, Senegal, and Ivory Coast, there are also growing focus on waste to energy and solar energy production solutions to help bridge the power gaps on the ground. In the space of housing, although West Africa's urban share is still below 50%, it is growing rapidly and is expected to surpass 50% in 2023. By 2050, the urban population in West Africa is expected to grow to almost 214 million minimally. With such rapid urbanization rates and lack of urban planning, there is now increased pressure on urban infrastructure and resources. The housing deficit in West Africa, led by Nigeria, is currently in excess of 22 million units with an increase of about 1 million per year. The largest demand in this segment would be in affordable housing. However, the lack of affordable housing finance is also posing a challenge. Some private sector developers, such as Mixta Africa, have since come up with supportive financing schemes that have enabled them to unlock more market share. Additionally, as the middle income class grows in the region, there's increased demand for high-end residential developments in key cities like Accra, Lagos, and Abidjan. Mixed-use spaces are also on the rise in Accra, being seen as a solution to traffic congestions and tortuous commutes in Europe's urban centers, problems which are increasingly afflicting West Africa's cities. Lastly, there's a rise in hotel investments and developments in West Africa as investors take an interest in emerging destinations in the region. The most attractive markets in the region include Ghana, Nigeria, Ivory Coast, and Senegal. Various governments in the regions have also put in place measures to spur travel and tourism sectors. For instance, the $1 billion investment in Ivory Coast tourism sector announced last year. Key hospitality groups on the continent like W Hospitality have also witnessed a growth in their hotel pipeline plans for 2021, with West African countries taking 30% of this pipeline for rooms needed on the continent. I hope the overview has helped our audiences to understand more about the region. Without further ado, we will kickstart today's first panel session. It gives me great pleasure now to invite Kunle, partner at PwC, who will be moderating this discussion on the future of West Africa. Kunle and the respective panelists, a gentle reminder to turn on your camera, and I'll hand the floor over to Kunle now. Kunle, please.
Thank you very much, Jane, and welcome to this very exciting panel on the future of Africa, West Africa, actually. Jane touched on quite a number of areas which are extremely important to the growth and development of the region. She mentioned oil and gas and the contribution, as well as the pipeline of mega projects, including the Dangote refinery. She touched on the tech innovation that we've seen and the big ticket transactions that led to Flutterwave and Paystack joining the Unicorn group, and also manufacturing, as well as the very important element of any development, real estate. All of that are maybe the focus areas of the panelists that we've carefully selected to discuss this very important topic, which is the future of West Africa. I have with me four important panelists. Mr. Awad Habib is the managing director of Xerox. I'm still going to give them enough time to introduce themselves. I have Mr. Karim C, the founder of and chief catalyst at Joko Labs. I have Mr. Venkataramani, who is the MD and CEO, MD, CEO and regional head of Olam International Limited. And then I have Mrs. Rolake Akikugbe Filani, who is the chief commercial officer at Mixta Africa. Welcome. My name is Kunle Amida. I'm a partner here in Nigeria at PwC Deals Advisory. I lead the deals team. Our priorities in the deals team is actually to support our transactions and deals that are coming into the West Africa region. And it's quite important because we deal every day with most of the issues that we expect to drive growth and development in all of these sectors. So I will hand over to my panelists to spend maybe about 2-3 minutes introducing themselves, starting with Mr. Awad Habib. If you can just introduce yourself in 2 to 3 minutes. Thank you very much.
Thank you, Kunali. Good morning, everybody. Rawad Habib from Xerox Group. So I will introduce for 2-3 minutes the group. We are contractors for civil works. We're established in Nigeria. We started in Nigeria in the 90s. In 2007, we established our head office and operation in Lebanon. 2010, we started our operations in Congo, Brazzaville. 2014, we started operation in Mozambique. 2016, we started operation in Cameroon. So we are established in 4 African countries and in Lebanon. We operate in the civil work sector, roads, infrastructure, and in the oil and gas sector. Our clients are ENI or AGIP in Nigeria, in Congo, and in Mozambique. We work for Shell as well, we work for Total, both in civil works and mechanical works. And I will be happy to share with you our experience in the oil and gas sector for the past 4 or 5 difficult years.
Thank you. Thank you very, very much. Thank you very much. Maybe Mr. Karim C, you can go next. Thanks a lot.
Thanks, Kunle. I'm Karim. Yes, I'm a serial entrepreneur more in the tech, but also in mining and in Mali and drilling and business airplane. And I launched 10 years ago as most of philanthropic approach, JoCollab, which is one of the main African network of innovation hub. We are now covering 8 countries. Senegal, we start from Senegal. Actually, Senegal 10 years ago, with Senegal, Côte d'Ivoire, Ivory Coast, Mali, Niger, Burkina Faso, Cameroon, and Gambia, and also France. 3 years ago, I've been joining the advising board council for Africa for the President Emmanuel Macron to advise on innovation, entrepreneurship, and digital for Africa. And then we launched this huge program funded by the French Development Agency called Digital Africa. It was a new approach for how to come and support the digital ecosystem in Africa. And I used to chair this for 2 years, and now back to Dakar to challenge the tech scene in Africa and challenge. Thank you to be with you.
Yeah, thank you very much. Interesting development and journey that you've had. Over to you, Mr. Venkataramani Srivatsan.
Yeah. Thanks, Kunle. Good morning, good afternoon, good evening to all, wherever you are, each part of the world. Very excited to be in the panel. I represent Olam. I'm the MD CEO for Olam Middle East and Africa. Olam is an agribusiness giant. We operate in 64 countries across the world and about 24 countries in Africa. And Jean said, I don't know, I think she's not very happy with me. She just cut our investment by a zero. We have, in West Africa alone, we have an investment in excess of about 2 billion in the agri and food sector. As Kunle was saying, West Africa, maybe but the slip of a tongue, the future of Africa. But actually, he's right. There is no future for Africa if there is no, if West Africa doesn't develop. And that's, in a way, it slipped out of his tongue, I would say. Really excited to be the part of this panel and looking forward to sharing my 2 bits in the food and agri sector and also listening to other eminent panelists. Thank you.
Thank you very much. Mrs. Rolake Akinkugbe Filani, over to you.
Hello, good morning, everybody. My name is Rolake. Really, really glad to be here. So I work with Mixta Africa. Mixta Africa has been active in the development of housing communities across Africa for almost 20 years. We currently have operations, subsidiaries in Morocco, Senegal, Tunisia, Côte d'Ivoire, and of course, Nigeria. But we also have projects in 8 countries across the continent, including Mauritania and Egypt. We take pride in the fact that we're one of the few African real estate developers that has successfully delivered more than 12,000 units across the continent. We have a land bank of about 15 million square meters, and we currently today have about 25 projects across the continent. I think in terms of what we've done over the years, aside being a real estate developer, we've also done specific infrastructure projects. We were one of the project sponsors for the Lekki Toll Road. We also one of the investors that funded the Amandi IPP project, as well as the Azura Edo IPP project. So infrastructure is a big theme for us. And by virtue of the work we do, we also obviously see several opportunities across West Africa in the infrastructure space broadly, as well as trying to position ourselves to contribute to economic development on the continent. Thank you.
Yeah, thank you very, very much. And I think hopefully, I'm sure, I'm quite confident that today, as we discuss the business trends and the opportunities, consumer trends within these four important sectors, because when you look at oil and gas, tech, real estate, infrastructure, manufacturing, those are very, very important pillars that should drive the growth and future of West Africa. I will start with Mr. Rawad Habib, just to understand what your view is on the oil and gas sector development in West Africa, and how you see the region, how the region has been performing as a whole, and also as part of Africa, especially when you look at countries in the major countries in like Nigeria, depending on oil and gas for its major exports of FX earnings and the impact that is having on the currency and the overall economy as we speak now.
Thank you. Well, I would like to go back, in fact, to 2010, 2011. The price of oil was very high. We saw a lot of investment coming to Africa to develop offshore project, onshore project, any type of project in the oil and gas sector. We had a boom all over Africa, not only in West Africa. At the same time, we had a lot of debt back on the African countries to develop those projects. Oil majors are, let's say, financing. Part of it is debt on the African countries. Unfortunately, 2014-15, we started to see price slipping down. 2016, we saw the price of oil at 26. So we started seeing oil majors canceling investments. End of 2014, 2015, big projects, then smaller projects. 2016, they started reducing maintenance even. 17, 18, then we had the COVID-19 pandemic, 2020. Fortunately, oil projects are developed during many years, 3, 4, 5, 6 years. Stopping the project, the investment project, it was 2014, has led to deficit in investment in the oil and gas sector. Today, with in parallel a big debt on the African countries. Jean made a presentation on West Africa. She didn't show us the debt ratio of the African countries. The debt ratio has exploded with revenues that decreased during the past years, mainly because African countries are dependent on exportation. We just talk about countries like Congo-Brazzaville that moved from 60% to 107% of GDP, while they had 8 years of excess in budget or excess in revenue. So I believe that today, in order to have again new investment in the oil and gas sector, It's true that the price is lifting up. It's at $71. So it's encouraging, not yet enough encouraging for offshore projects. We are seeing moves in Nigeria with Shell for onshore projects. Same thing in Congo. Some people, unfortunately, we know what the situation is. So those prices are not enough, are not high enough for offshore projects. Total has offshore projects ready, but the price is not high enough. And on the other hand, the African countries are in a lot of debt. So with this high, we are seeing also a return to maintenance or bigger maintenance than before. Return on onshore projects, but from our perspective, are not touching offshore projects development. Fortunately, I believe since we had the COVID crisis last year and a lot of money has been printed, same like 2007, 2008. So 2-3 years, this money will find its way again to Africa. But in the immediate term, for the 2-3 future, 2-3 years, coming years, we don't see much changes in the oil and gas sector.
Yeah, thank you. Maybe a follow-on question to that will be just to understand where you see the future potential for new development or trends in the oil and gas sector, being a major a company that services and work very closely with these upstream companies.
Sorry, it was for me the question.
Oh, okay. I said where you, just to come check where you see the future potential for new developments or trends in the oil and gas sector, given your company's involvement.
In fact, we are seeing more and more oil companies, all majors, looking to invest in biocarburant, biodiesel, how do you say in English? Biofuel.
Biofuel.
Solar, we are seeing Eni investing in Kenya, this area. We are seeing them starting to invest in Congo in this area. We are seeing also Total looking to invest in solar energies in West Africa and Central Africa. There is a shift toward those energies, and this is something that is good for Africa, for the world. We are seeing also a big shift toward gas, and it is good for the environment because we know the number of flares that we can see all around oil fields. So this is something that's very positive. And onshore development, which are, of course, more accessible and less cost.
Okay, all right. Thank you very much. I will move very quickly to Mr. Karim C, just to check with him what is, the tech guys. There's been so many activities. They supported a lot of us, especially during the COVID era, as we transitioned into a new ways of work. Just for you, from your perspective, what has been the trend when we talk about innovation, especially in the Francophone Africa space, and how that has been, when you compare it, how comparable is it to other regions in Africa?
Well, thank you, Kunle. I think it's very interesting because the COVID have pushed everybody to the boundaries, and because everybody was blocked and stuck in this country, so they have to find solution from themselves, and then it became a kind of obligation to find solution nearby, and then to turn to their local expert instead of all the expert from above who was already engaged in their own finding their own solution for their country. And that create a first change, because they say the leaders find that they can actually count on some solution around. If I take Senegal, for example, Ivory Coast or Niger, there's a lot of solution to emerge on the health scene, for a solution for the hospital, for all the chain and different solutions that have been key for the response to the COVID. And that was very interesting. So that was the first thing, and sure, it also brings like what we are doing now. I mean, there's new habits, and that's perhaps the biggest trend we can see, is that now it's nothing to think about remote workers, avoid all those mission to go and make a meeting face to face. We know that now we can use all those digital tools. Even the eldest people from the civil servant, very old, have been forced to go into that and install application on their mobile. I mean, so the change of habits are really something, perhaps what is the biggest. Even the head of state have run some summit online. So we know that the leaders have to show the way, and when everybody has seen that, now the habits have changed, and we can run even those kind of meetup together today, conference online, and cross the boundaries between Singapore and that's one thing, and people learn. It's a learning curve, but people are learning to work together about. Also, from the COVID, the lesson was perhaps we need to less be on fashion and go direct on very key solution. Key solution meaning health, meaning edtech, even the fintech field that was already trendy. But now, I mean, education, health, e-commerce as the retail and as Jen put it. But the e-commerce, health, education have been something very key that emerged during the COVID. That they need different solution and need a really big solution for that. The agri-tech, Olam is there, and so is also now emerging. I mean, people understand that. I mean, you can't have 70% of the population there and doing nothing. So that is interesting. Is that the trend that starts at the capital, at the city and the urban center mainly. Now more and more people are thinking how they can do some agri-hub and some even in Jocolab, we are working on that in Cameroon and in Ivory Coast and Senegal. So how to go there and also develop a culture of entrepreneurship, and how we can also bring new capacity there. We need to mention that this year is quite bizarre somehow, because we are coming out of the COVID, but in the meantime, and perhaps in the sector we have logistics also. I didn't talk about it, but it links to the e-commerce, logistics. How we have some platform that really help on that issue, and then it's become really brick and mortar. So an hybrid model. More and more we see that is coming. What I was saying is that the funding was surprising, because this year we are in a kind of record year. I mean, we didn't, in 21 weeks, we reached 1 billion in funding for the startups within all Africa. This is what we reached last year. So it's only on 21 weeks. So it's like booming. We don't understand what's happening. So that means we can finish the double this year. But meanwhile, we saw that there is 4 cities, it's even not countries, who are capturing main of the funding, perhaps 80%. It's Lagos, it's Nairobi, it's Cairo, and it's Cape Town, Johannesburg, so South Africa. So this is something we need to work on. Perhaps also something is somehow a trend from abroad. because some studies shows that 80% of the funders was white funders and more Western funders instead of who get the funding. So there is an issue for how to bring more local and so we're still working on the ecosystem everywhere. I mean, there's some more mature, but still there is a gap because an ecosystem is more how you bring people from the ideation to become a real performing and profitable startups, and this is a huge the valley of death actually it's very high. So there's a lot of work, and more perhaps also people are understanding more. So there is this Smart Africa Alliance, which pushed by the African Union and with the leadership of the President Kagame, and with 35 presidents behind that, pushing for more understanding of the tech scene also. I think what we see simply is that we are in a transition between and COVID really push us to understand that and face us to the wall, and then we understand that there is the whole economy, and now there's the new economy that is merging, and we need to find a new way of doing things, a new way of as Habib put it, we need also to be in the prospective mode, to include the green economy, and facing all these issues we have doubling the population every 20 years, having this ecology and climate change issue, having the issue of how we will feed the world, and be sure Africa will be part of the solution. We have new spot for gas, like Senegal, Mauritania are becoming new producer for gas, and we are in a big preparation for how to make also transition between oil and gas, and so all those issues, how we take advantage of it. And it's funny because I think 2 years ago, I have someone from Mitsubishi who come to see me at Chocolab and actually say, hey, we just invest in Olam, and I'm part not of the cars. Everybody knows Mitsubishi because of the car, but we don't care about cars. Cars is just one branch. We are more bigger than that, and actually with Olam now we are touching the farmers. So he's told me, I'm from the Future Forward team. I don't know. And so how we want to think how we can change the life of our farmers. And I think that's the way we need to think now, to find solution and bring some tech solution, how we change the life. And then it means how we bring all the development issue we're facing. I mean, energy, water, we talk about solar, and we know that we have this new solution for the solar with mixed with the fintech and all this. So we can talk more about it. Thank you.
Yeah. I think there's a lot going on in the fintech space actually that requires it's been very impressive. And we see all these transactions because we are on the deal side as well, supporting all these flows into, and I like your point on how it's still concentrated in a few cities, and that speaks to the potential and the upside that's the untapped potential around that. So I'll come back to you on, because we still have maybe a few things to talk about. I'll go to Mr. Sri just to understand how West Africa has developed in the area of agriculture, especially given what COVID, the disruption brought by COVID last year.
Thanks, Kunle. Well, let me just roll back. In 2003 there was a Maputo Declaration. The African governments have committed to food security. Though we hear about it nowadays quite often, it was way back in 2003. African government committed to food security, and they all said that they will spend a minimum 10% of the total spending, for in development of agriculture and achieving the food security. Fast forward 20 years, almost 20 years now. Where are we now? No government has spent 10% of what they said they will spend. And even those who had spent nearly, allocated the budget, we had made I had looked at the, this is, I'm not saying this is UNDP FAO, report. And they just released the report last month, and they said that even the countries where they have a larger allocation to the agriculture budget, almost 80% left unspent. So, I don't want to get into the debate. Is not about why, what, what cost and all. That's for a different day. I want to highlight this point because, okay, if that was the level of spending committed, and that was the level still there is unspent, we should realize that what is the opportunity lies ahead in that sector. You look at any macro indicator. Jean just said in her overview, agriculture contributes to 20% of GDP, 70% of employment. And one of the biggest thing, given our demography of the population, the youth, and this one of the biggest thing is about creating jobs, creating jobs for the youth. Yes, Karim and his, thing about the tech jobs are sexy, tech jobs are this one, but end of the day, you can only create an X amount of jobs in every other sector, whether it is oil and this one, whether infrastructure. Agriculture is the only place. I'm not saying the ag ecosystem. When I say agriculture, I'm not expecting everybody to become a farmer tomorrow. But the whole supply chain, the food supply chain, the food ecosystem, whichever way you call it, and that's the biggest chunk which can create the largest employment. So coming back to this, we see a huge potential, untapped potential in this space. Just to give some, again, bring it to the light, the pre-COVID, some of the fastest growing economies, which was in West Africa, like for Cote d'Ivoire, was growing at in excess of 8% for almost a decade. And almost the major driver of their growth was coming from agriculture. Just to put that in context, in 20 years, Cote d'Ivoire has become probably nowhere in the map of cashew. Jean said West Africa produces 50% of world's cashew. We all know West Africa for world's cocoa production. World's cashew, 50% of production is in West Africa. Out of that, 80% is happening in Cote d'Ivoire, and it's world's third largest cashew producer as we speak now. Probably almost in second, maybe in this season, because they had a huge bumper crop. And cocoa, again, I don't have to talk about it. And but really, where it can all lead, yes, the country grows, and there is always this cry that, okay, Africa produces the world's raw material, but the value add is happening elsewhere. And that is where I see a huge potential. And I believe there is a huge realization amongst the policymakers also. There is a real push. In that way, while I should not be saying this, the pandemic has become a good wake-up call, and also an opportunity set, because world over now, everybody is thinking about a 1+ approach in terms of their supply chain, in terms of their diversification of their production supply base and everything. And I see that, whether it is companies like the multinational companies, like the big chocolate making companies, used to take all the cocoa from West Africa, make their chocolates in Europe and US or in China, and send it back to Africa. Today, they have realized that they should better have a facility in Africa itself, because then suddenly you will see that the Kit Kats going out of shelf for months together because of the supply chain disruption. So this has left a huge opportunity set for the big ones, for also the SMEs, because what happens is, I give a small example of our own experience in, say, Nigeria and rice. So when Nigeria banned the importation of rice in 2010, or I don't remember the exact year, somewhere around that time, we were the first corporate venture to get into a commercial farming in Nigeria. We had set up our own farm in Nasarawa state, 10,000 hectare rice farm, a country which was the largest importer of parboiled rice of 2 million tons. They were importing that point in time, and everybody was skeptical. Well, just roll forward 10 years. Not only that, in our farm, we were able to do a vibrant production. Today, there is a whole rice processing ecosystem which has developed in Nigeria. And whatever you can say that, okay, the rice is flowing through borders, this, that, and all, the 2 million tons which was coming into the country today is not happening, So,
yeah.
So that's the, and just to take in this one, we could develop almost 40,000 farmers who are, in the smallholder farm. We use our farm as a nucleus farm, and there is Volam alone has set up 3 mega rice mills, and I know there are about 50-60 rice mills of various sizes have come in the last 5 to 6 years. Everybody. So, and the whole ecosystem. Now, looking at this one, there was a huge need for the microfinancing. This one, CBN at the right time intervened. They have gone this anchor borrowing system. So, what it means that there is a whole ecosystem which has developed, and that provided the multiplier effect. So and that's just one commodity in one country, and probably not even it's still a journey in progress. So that's the tip of the iceberg. So wearing being talking from Singaporean companies for my Singaporean business friends, and this one, it's a huge opportunity waiting to be tapped there. Yes. When you sit from this side and talk to, look at the media, you always feel, media always, they tell you what makes news, which is sensationalization. So if there is, a COVID-related issue, a pandemic or a lockdown in Lagos, that makes the news. Lagos has come out of lockdown, that doesn't make the news. So that's the I would really see, and we are very optimistic, because if you see any fundamentals, yes, there will always be short-term challenge, and today that short-term challenge, again, I would you can blame it on pandemic or this one. Today the challenge is in US, in California, state of California, as much as in, say, in Taraba state in Nigeria. So, whether it is lockdown, whether it is, everything, you have all the infrastructure in the world, but you can't even visit your neighbor. And that was the state. And we had all gone through that the last 18 months. So the issue is post-pandemic, if we can all put together, and this AFCTCA has come in the right time, and if on a collaborative approach, if we can royal, the public-private, this one, it can be a new story. Africa can be a solution for what Karim said, we have to feed the world, 2050 population, all that. Africa can be a part of the solution, not, we have always heard as Africa part of a problem, but that narrative can completely change.
Yeah, thank you very, very much. And I think Olam is, like you said, a big player, and you guys catalyzed the rice revolution in in Nigeria. I will move to Mrs. Rolake Akikugbe Filani now, just because without adequate real estate infrastructure, it's difficult to achieve the developments that we are all talking about. And Mixta, given your presence across Africa, it will be good to understand your perspective on the trends in the building, commercial, housing development space in West Africa, and how you would compare the perspectives in Anglophone and Francophone countries.
Okay, thank you very much. I don't know how long, can you give me a sense of how long I have for this first question so I can sort of pace myself?
Maybe 7 minutes should be okay.
Okay, all right, thank you very much. So, I mean, in terms of the broad global trends, I think one of the big things that we saw that was an impact of the pandemic was slower uptake, particularly for commercial and retail spaces. We saw recorded lower occupancy rate, and we also saw increasingly high turnover of tenancies. I think the other impact of what we saw last year is large-scale delivery of new residential units slowed down, particularly because of the impact on construction activities. And if you think about it, for about a year, construction activities would have ground to a halt. So the sector certainly took a bit of a hit. But for parts of the region, West Africa, we also saw a sharp rise in construction costs. And that was partly as a result of the disruption to global supply chains. And if you think about it, that further exacerbated pressure on an already depressed market. And so by the time you came to the end of 2020, the market dynamics across a number of countries that
Hello?
consumer finance became more accessible. But now you're facing a situation where you have a supply shortage in any case. So you continue to have this wide gap in the industry. But looking ahead for the region, I know that globally the real estate market will grow by 3.2% this year as we recover. For a number of handful African countries, we're seeing a significant increase in the implementation of affordable housing.
Hello, can you hear me?
I hear you, but I think there's a problem.
Okay, I think is our internet, is our connection. Yeah.
Where is she?
Yeah. No, she's probably in Lagos, I think.
So you can we can experience some problem with the tech in Africa.
So that's an opportunity.
Yeah. We typically, so there's a question online. I think she's left. Maybe while we wait for her to join again, maybe this will be for Mr. Sri, just to understand the extent of integration with digital farming in West Africa, and now how that has helped farmers in the region. Okay, I think she's back. We'll take that question.
Yeah, sure.
Apologies for that. I don't know where I left off. What was the last thing you heard?
I think you mentioned the expected growth in the region, about 2 to 3% growth expectation.
Okay. So I was still a bit of, so I was saying that we expect the growth rate to be about 3% in the real estate market. We're also seeing new housing policies emerge for a number of economies. I note in particular Senegal, which is one of the countries in which we have operations. In Senegal, we've delivered over 2,000 housing units in our LDP development in Dakar. The governments are embarking on new programs to support both on the supply side with the developers, but also on the demand side with increasing access to mortgage finance. It also must be said that from the perspective of a developer, you know, when you look at your development costs, the cost of constructing homes, you know, one of the largest constituencies and buildup of that is infrastructure and land. In fact, land acquisition can constitute up to 30 to 40% of your overall development costs. And so, you know, if governments move towards helping developers acquire land or providing that land as equity in joint venture partnerships, that is obviously going to help to shore up the supply of homes in the markets. And, you know, as developers, you know, we're not a social housing developer. What we are is an affordable housing developer. So if you segment the West African market, you have your social housing, you have your affordable or economic housing, you have your premium housing, and then you have high end from a residential perspective. And given the twin impact of interest rates, borrowing costs, the FX issue, the disruption to supply chains, many developers in this market are finding it very, very difficult to play in the affordable housing space. If you look at what is defined as affordable housing globally by a lot of think tanks and research institutions, if you can supply housing in the region at a cost of $10,000 and below, then you're really entering the affordable domain. Now, what does that translate through to today in local terms? Is that really affordable for the majority of consumers, given what is happening with African economies? So this is a real quandary. So we believe that in order for this sector to grow and thrive, we need to see more public-private sector partnerships. Then in terms of some distinctive trends between the Francophone and Anglophone markets, one of the things that is very, very notable is that the Anglophone market does not have a common currency area in the West Africa region. Although, as you're aware, there's been talk for several years of an echo currency for countries like Nigeria, Ghana, Liberia, Gambia, Sierra Leone. But in the Francophone market, because of the pegging of the CFA franc to the French franc, to the euro via the French franc, we've seen greater currency stability in those markets. Unfortunately, for those who play in the higher end of the market here, you know, you may be sourcing a lot of your inputs from overseas. So FX is really a challenge. And one of the ways that I think that will help the Anglophone markets to manage currency fluctuations is by localization. So sourcing more of your inputs and construction materials from the local economy, which will then reduce your FX exposure and the need to mitigate those sorts of risks. So I think that is one of the things that will really transform the industry in the region. The other thing I will mention in terms of broader trends that we're seeing is with the advent of the Africa Continental Free Trade Agreement, we expect to see more innovation and technology. And so, for instance, in West Africa, there's at least now probably up to 100 prop tech companies. And for those who may not be very familiar with this term, prop tech essentially refers to property technology. And it's technology that is transforming different parts of the value chain. I won't get too deeply into that now because I think you have follow-on questions around there. But what that means is that there is a growing economy of disintermediation where it's no longer just housing developers facing consumers who want to buy. You now have a plethora of people who are providing listing services online, who are providing price comparison services, and all of these things will transform the market across the region. And hopefully with the ease of doing business within AFTA, if we can see a greater move towards regional integration within the West Africa region, I can definitely see how this will propel growth in the sector going forward. So I will leave it there for now and hopefully delve deeper into some of these things in the subsequent questioning. Thank you.
Yeah, there's one question I just want to ask you. One of the questions we have from the attendees. Are there any specific areas or gaps that you think the Singapore companies are in a good position to help in affordable housing space?
Yeah, that's a very, very, very great question. I definitely think there is. You know, one of the things we haven't done really well as developers in this part of the world is on innovation and innovation in building design and technology, as well as energy efficiency. There's been a lot of talk about climate change, and I actually have an energy sector background, so this is something that is particularly important. And then the second thing, as well as the capital intensiveness of the industry, it's infrastructure heavy. But if we look at the energy efficiency angle, today on the continent of Africa, there are approximately, I think, 700 certified green buildings across the continent. And I know this is something that Singapore has experience in. We need to see more innovation in green building technologies that will help us improve transparency, reduce long-term costs, and improve, hopefully, asset value in the long term. That is one area. Rapid expansion of green buildings and green environment and the natural environment. The other part I would quickly add with regards to this is really around construction materials and innovation. We often get complaints here in the local market that we build expensive. You know, Africa and West Africa are still very much about bricks and mortar. One of the things that is being talked about is looking at modular solutions for buildings and unconventional building technology, such as live gauge steel construction. I think those are areas in which the Singaporean business community or developers who want to partner with us locally here can look at. And then finally, hospitality. We know that in Asia and East Asia, that is something that is pretty high on the agenda. And I think hospitality infrastructure is going to be key to the future here, particularly as we start to see new types of trends in the travel and tourism industry. Thank you.
Yeah, thank you very much. So let me quickly go to Mr. Awad for a minute or two. You mentioned earlier that you upstream companies now are diversifying and looking to invest in other biofuel and other aspects, maybe renewables in some instances. With the shift that we are seeing, what's your view? What do you think of this increasing trend of maybe diversification into renewables and other aspects? And how is your company adapting to this change?
Well, just to give you an example, we are finishing now the construction of it's called the Center of Excellency in Oyo. It's a laboratory for renewable energy that company ENI has financed, and it's about to be inaugurated in one month's time to do research on renewable energies in Congo and develop this sector. So it's a very encouraging move from ENI to invest in this sector. I believe Africa has immense resources in terms of land, sun, and of course the people. So investing in biofuel is a big opportunity for agriculture in Africa. Constructing solar farms also is very interesting for investors to build solar panels in Africa. So this shift is a huge opportunity for Africa because it will empower local actors and local manufacturers. And from our side, of course, we are present to partner with all majors in those sectors. For example, we built this Center of Excellency, and we are involved in those other projects as well.
Okay, thank you very much. Karim, very quickly, you spoke about the concentration of tech investments and possibly innovation in a few cities in Africa. What do you think can be done to drive innovation and increase adoption in other areas, so at least that can impact or attract more investment into this space in West Africa?
Thank you. I think you can see that first it's mainly English-speaking countries, so and speaking town. So that's one thing. And as I said, it starts with the capital. You know, somehow the trends of tech things and tech trends is quite new. So people start with the big city and where they have more links. And as it's for now very pushed by the US tech scene also. So it's normal that the place where they have more contact is the one who are more developed and they are more exchange. You know, I think Nigeria is quite special also because there is a very vibrant scene there, and we don't know, I think, really what's going on over there. It's a whole continent, just Nigeria, but there's a lot of business angel and things. So there's something. If the ecosystem was more integrated and more united, perhaps there is a lot that can come. And now I think I hear a lot of people talking about cross-border initiative, meaning not just focusing on ideation and how to help an entrepreneur to scale, but how someone who is successful now, we try to bring him from one country to another. So being more as ECOWAS or as YMU or was as African. So that's very interesting because then it opened the market and then perhaps it gives more capacity. It's like, I mean, you start something in the US and you say you want to be the leader in the world. I mean, now we see more and more startups who say, okay, we want to start here and be a leader in Africa. So that's very good and very interesting. So there are more mobile. I was talking to little startups on e-commerce for retail of furniture made in Africa, and they start in Mali because they were coming. They are Malian. They were coming from France, and now they are based in Ivory Coast, and they are selling in more than 50 countries, and they just made 50 million euro revenue. So it starts.
Yeah, thank you very much. I think before closing remarks, I think I would like to go to Mr. Sri of Olam, just to understand what strategies or initiatives Olam is pushing in the area of sustainability.
Oh, very, very good question. Obviously, we really, sustainability is key for the world, and for agriculture, we don't have a future if you are not sustainable because of the impact of climate change and all, which we already started feeling and affecting. So Olam has been a pioneer, and in fact, sustainability is not CSR for us. It's integral to business model. So whatever we do, we have sustainability is the core of this one. So very briefly, I know we run out of time. So we have got the complete, we have committed to, like for our cocoa business is committed to complete traceable supply chain by year 2022. And we have got, we provide, combined with the digital, this one, we provide a in-house developed in-house digital tracking for all our, this one, what we call it as AtSource Plus, AtSource Infinity, which tracks, for example, AtSource Plus, which in this year for Ghana, the cashews which we ship from there, almost 10,000 tons of AtSource Plus certified. That means there are 80 sustainability indicators, including their carbon footprint, this one, the customer can track, and this one, and this is externally verified and audited and certified, and this is done with the use of digital technology, so they can sit in their homes and or in their offices and do it, monitor that, the cashew which has traveled from all the way from, say, interior parts of Ghana to the shelf of a Walmart or a supermarket in California, you could track that, this one. So So it's an interesting, I can keep on talking, but yes, sustainability, we have realized early in this one that we don't have a future if we are not sustainable as a business. So we have integrated sustainability into the core of our business model and business strategy.
Yeah, thank you very, very much. I'm sure these sectors are quite integral to the future of West Africa. We really need to change the narrative from being consumption-led to manufacturing and driving growth, and also exporting out of Africa in addition to taking advantage of the Continental Free Trade Agreements. And tech is key. Real estate is important, and I really, really appreciate. I had so much insight that I have in my notes here, which I'm very sure the participants were. I think there are still questions coming through. So thank you very much. We run out of time, but I will really appreciate your time. It's been very interesting speaking to each and every one of you. I'm sure we'll connect, and I'm sure we'll answer a lot of the questions that we are unable to attend to during this session. Thanks a lot, and enjoy the rest of your day. Over to you, Jin.
Thank you all, fellow panelists. Thank you, Kunle.
Thank you very much.
Thank you.
Thank you, Kunle, and our panelists for your valuable insights and sharing here. For everyone else, please do stay on the line as we'll be starting our second panel discussion on manufacturing opportunities in West Africa. Our moderator for this panel is Fernando, who is the Chief Investment Officer in charge of the private sector industries and services at the African Development Bank. Without further ado, I will now invite Fernando to turn on your camera and kickstart the second discussion. Fernando, over to you.
Thank you, Jean. And thank you very much to the panelists in the first panel for that very interesting discussion. Can you see me okay? Can you hear me okay?
Yes, we can see and hear you okay.
Great. Welcome to panel 2, Manufacturing Opportunities in West Africa. Today, we're fortunate to be joined by industry experts from across the region, Mr. Joseph Silari Amuna, an FMCG operations and supply chain practitioner, Mr. Vikas Singh, Managing Director, Far East Mercantile Company, Mr. Yao Bediako Sampong, General Manager, Operations, Ernest Chemists, and Mr. Sylvia Akkad, Group CEO, Auto Parts Limited. My name is Fernando Valderrama, and I am a Chief Investment Officer with African Development Bank, where I focus on promoting and facilitating industrialization across the African continent. At AFDB, we provide financing for commercially viable projects with strong developmental outcomes. My contact details will be made available by the colleagues from Enterprise Singapore, to which I'm very grateful for this kind invitation. For the next 10 minutes, I'd like to invite each panelist to introduce himself and tell us a little bit about their experience. We will then move to the panel rounds and aim to leave about 5 to 10 minutes for questions from the audience. Mr. Zilari, please.
Thank you very much. First of all, let me thank the organizers for extending the invitation to me to be a part of this forum as a panelist. I also extend greetings to my fellow panelists and most importantly to all participants who are joining this webinar today. I believe it is an opportunity for both panelists and participants to share ideas both ways and hopefully to move on to making real some of the ideas that we are sharing together today. My background, I am an established FMCG operations and supply chain practitioner, having built a strong career of over 17.5 years with Unilever, a multinational, and more recently about 4 years in the Equatorial Coca-Cola bottling company, the West African business unit. I formerly doubled as a supply chain director and an executive board member of Unilever Ghana, and currently serving as the operations director for the West Africa business unit of the Equatorial Coca-Cola bottling company. My specialty is mostly in the end-to-end supply chain, spanning from procurement through to sales and operations, cross-regional border sourcing, brand innovation planning, make or buy sourcing decisions, manufacturing operations. And I also have a wide and deep background in planning and sourcing across Africa, the Middle East, Turkey. I hold a material science engineering background with a master's program in governance and leadership. And I'm also an ethics certified CPIM holder. Thank you very much.
Thank you very much. And thank you, Joseph. Mr. Singh?
Thank you so much, Fernando. Thank you, Enterprise Singapore, for inviting me and my honorable other panelists on the panel. Greetings from us. Vikas Singh. I work as a managing director of Far East Mercantile Ghana. Far East Mercantile is a century-old company in West Africa, so we are heavily ingrained in the soil here. We've been here for long. Our core expertise is FMCG manufacturing and distribution. And recently, we have tied up with Imperial Logistics of South Africa. So we add the logistic arm to it as well. Our footprint is largely in Nigeria and Ghana, where we are dominant players in the manufacturing and distribution space. Besides that, after a tie-up with Imperial, we have now a footprint in Sub-Saharan Africa as well. Grateful to be here on this place. Very nice economy, very nice. The industry is doing well, and really nice to be part of this panel and to discuss more opportunities here. Thank you.
Thank you, Vikas. Mr. Bediako?
Yes, I'm Bediako Sampon, and I'm the operations general manager or operations at NS Chemist. The NS Chemist is one of the leading pharmaceutical companies in Ghana. The company was founded by my CEO, Mr. NS Bediako Sampon, in 1986. We started with a small retail shop back then, and we've grown into one of the largest with a large retail network, wholesale network, and a manufacturing division over the past 35 years. NS Chemist is structured into three main divisions. We have the manufacturing division, where we have two facilities, manufacturing facilities at the moment, and we are putting up a third one. Currently, we're about 80 to 90% complete on that one. And we also have the trading division as well, which it's broken into two divisions. The wholesale division, where we represent some of the big multinationals, pharmaceutical multinationals in the world. Then we also have a very wide retail network. I think one of the largest, or the largest network in the country. We also have a subsidiary in Sierra Leone, and we've exported to Liberia, Guinea, Gambia, and other Ivory Coast as well, other West African countries as well. Our vision is to provide healthcare, affordable healthcare healthcare in Africa, to be a leader in providing affordable healthcare and pharmaceutical healthcare in Africa. Yes, and we also employ about 800,000 people in Ghana and Sierra Leone. Yeah, and we're also happy to be on this panel. Thank you.
Thank you, Bediako, and thank you for those introductory remarks. Mr. Akkad?
Thank you, Mr. Balderrama, and thanks for inviting me to be part of this panel. My name is Sylvia Akkad. I am the CEO of Auto Parts Limited and Universal Motors. It's a family business which started in 1941 in Ghana. We have been in the auto industry, specifically in spare parts and manufacturing workshop for manufacturing of engines and gearboxes up to mid-50s, where the company which was established by my father, Mr. Ivory Coast, started and they moved into the process of importing vehicles. We started with Morris, and then 1958, Japan was the new hub for, the new starters in manufacturing and for exports. This is when we moved to Prince, which was part of the group Nissan. In 1961, we became the official importer of Nissan, Datsun Nissan in Ghana. And then in 2004, we got the opportunity to represent Volkswagen in Ghana. In 2010, we got the possibility of representing Porsche and in Ghana as well as Mercury outboard motors and inboard motors and Mercruiser boats. We have been very active and in the car industry and jump on every opportunity that can develop and take us further in. The future is there. The auto industry is changing at a very high pace, and there's a lot to do and lots of changes. And this is where it is very important. And that's where I see the Singapore investment can be of a great impact here in Ghana. Why Ghana as well? That will be answered later on, I think. Thank you.
Thank you, Mr. Akkad. Mr. Zilari, in 2-3 minutes, could you tell us a little about the current trends and growth areas in the FMCG sector for Ghana and the larger West Africa?
Yeah, thank you.
Again, about the trends and growth areas in FMCG. Thank you.
Okay, thanks very much. I think I would like to go back a bit into about 20 years ago, what we saw with the FMCGs and what we are currently seeing. A lot of you will recall that about 20 years before, FMCGs generally wanted to have full control over the entire supply chains. And so what they basically did was some of them backward integrated into the raw material supply areas apart from their manufacturing core areas. And then also a lot of them got involved into distribution, even to the extent that some of them distributed directly to retailers and also to consumers. I can cite the Unilever as an example, where Unilever Ghana a couple of years ago was involved in the development of palm fruits and processing that as feedstock into its soap making process and then edible oil production process. Okay. The Coca-Cola bottling company of Ghana is another example, which used to directly distribute its products into retail and to the large extent into direct consumption. So there's been this move where they have wanted in the past to control the end-to-end supply chain. But I can even recall that some of them went to the extent of setting up training schools where they were training their employees. And then others also set up clubhouses, Now, what has changed? The FMCGs have now, over time, moved or shifted from this particular approach to focusing more on core competencies and then outsourcing areas which they regard as non-core to their, objectives. So, for example, you have the Unilever focusing on manufacturing, marketing, and sales, which is their area of strength. Coca-Cola bottling Ghana, focusing on manufacturing, okay, focusing on marketing and then sales as well, and outsourcing specific areas such as the warehousing of their products and then the distribution of their products to companies like the Far East Mercantile Company and then to companies like Forwin, who are widely represented across Ghana. Okay, so that is one big shift that we are seeing. They have also gone to the extent of letting go of some of their control over the source of raw material. For example, Unilever Ghana has let go of its benzo oil palm plantations to other investors and now are focusing on core manufacturing. R&D activities, which used to be localized, more and more we are seeing, especially the MNCs, having to centralize these things in their regional offices. The distributor model is something that they have taken keen interest in and adopted. And you can give examples from Nestle to Coca-Cola to Unilever. I've already mentioned a bit about warehousing management. At the moment, when it comes to the Coca-Cola Bottling Company of Ghana, they have got Imperial, who are currently handling their warehousing for them. Okay. Now, these kind of approaches in the past have not been so helpful to most of these MNCs. And that is why more and more they have decided to focus on the core areas of competencies and just let go of those non-core areas to people or companies that have got the expertise and who do these things much more efficiently. Now, in terms of the value chain, how has this somehow impacted the value chain? And I would like to approach it from the perspective of the end-to-end supply chain activities that are required to reach the final consumer. By that, I mean manufacturing organizations focusing on the plan, source, make, and deliver without necessarily being the ones who are playing in every single part of the chain. Okay, like I said before, the focus is now very much on where they believe they have their core competencies. So with manufacturing setups, we have seen a trend whereby large MNCs are still using known and proven technologies in manufacturing, okay, with these technologies mostly being sourced from Europe. So if you take the beverage industry, largely you see the cedars, okay, you find the cedars in most of our manufacturing setups. You find the pros in there. Okay. So these are very expensive technologies that the multinational FMCGs tend to go in for because they believe they are much more efficient. Okay, and so they tend to go in for that. But one thing that I can assure you of, and from my experience, what I've seen so far is that these technologies cost a fortune. And it can cost between 300,000 to over $1 million or euros every year in maintaining these lines. Okay. But that is the kind of trend that we're beginning to see. Okay. They have stuck to the use of technologies that are quite proven and then very, very expensive to maintain. Now, it then depends on the sustainability of it. The question is whether you can sustain it or not, depending on the terrain, the competitive terrain, and how business is going. They are beginning to centralize more and more planning. Planning is largely not done within the country of operation. You have a headquarters sitting somewhere, probably several kilometers away, and most probably in Europe, depending on the source of the ownership of the business, who are generally managing planning from that perspective, and some tend to be sometimes far away from the realities on the ground. Besides these huge investments, we see FMCGs owed to the very high standards for product specifications. They tend to source their input raw materials largely from the offshore market. And this tends to expose them greatly to forex fluctuations and all the happenings in the global shipping arena. And at the moment, it is no secret or no news to everyone what is happening in the global freight industry. Okay? So because they depend less on local feedstock because of the kind of specification standards that they tend to set for themselves, it becomes very, very difficult because then the cost of product becomes quite high. With the deliver part of it, which is mainly the distribution part of it, I mean, they have bought strongly into the idea, and I can say it on authority because I'm in this industry and I can say it with authority that a lot of them are beginning to see that they are simply not efficient in this particular terrain of distributing products. And so third parties are currently doing it for them. You cannot run your own warehouses, okay, own your own fleet and several of such, okay, put in capital to buy a fleet, okay, and then have all the marketing and sales activities go on and have a host of people line up every day doing this thing on your behalf, and actually they do it inefficiently. Okay, you cannot do that. So FMCGs have become wiser and have tended to move away from that. In all these, they still largely run a matrix organization, okay, especially the MNCs, the multinational companies. They still largely run a matrix organization where there is an in-country organization managing the day-to-day operational activities with possibly a heavily loaded headquarters staff providing strategic direction and support or other corporate services to them. And I mean, it is very clear that these things come with management fees, which sometimes are not sustainable when it comes to competing with locals. But then when you look at the locals, it is interesting how that is panning out. Following the same structure of plan, make, and then deliver, the locals tend to start on a very cautious note. What do I mean by that? For startups, most of the locals will normally go in for cheaper technologies, mostly from Asia, from China, from India. Okay, they will start with that, study the market, I mean, gradually look at how it goes. In other words, they are measuring their risk. And based on that, they then determine when growth comes to begin to veer into bringing in much expensive technologies or much efficient technologies, which are largely sourced from Europe. I have seen so many examples of this in Sierra Leone. I've seen examples of this in Liberia, where one of our partners, the Coca-Cola bottling company, started with Chinese lines for carbonated soft drinks. He started with about 3 of such. And then when he grew and took over control of the market, he then decided to go for the prawns and then the cereals and all that. And I've also seen that in Ghana as well. Now, they started small, they grew, took over the market, and then they started injecting cash into more expensive and sophisticated technologies and much more efficient technologies. Now, the question is, what is the advantage for that? What I've noticed is that with the bigger, what do you call it, brands, like the prawns and all that, you tend to struggle to have them to come down for even simple annual maintenance interventions. Okay, just pray that it doesn't coincide with the annual, what do you call it, summer holidays in Europe. You will not have them. You have a breakdown and you have a big challenge. Whereas in the case of sourcing from Asia, you tend to have them readily available. Some of them even have regional offices here, which they tend to put men on the ground and they are reachable much more easily. Planning is done locally. Planning is done locally by the local, what do you call it, players. And so it's just a one-touch decision which is made swiftly. Okay, sourcing of input materials tends to be flexible and sometimes sourced from in-country because then in terms of standards and specifications, they are not so strict about it. Their R&Ds are largely done locally. And I've seen one big player in Ghana who has set up his R&D in his office. And when I visited him, he took me through it and showed me how he does it. Very, very interesting. And he does very good products. You taste it and there's simply no difference between that and what probably a multinational large player will be providing. In terms of delivery to the trade, we have also noticed that they tend to take control, and small players take control of their own deliveries most often, as they feel they cannot afford buying or sourcing from the likes of Forward. So generally, I believe these are the trends that we are seeing, and Singaporean companies who are willing, or investors who are willing to come in, probably can look at these trends and see how best they can fit into it. Thank you.
Thank you very much, Joseph. Yeah. In terms of the next section, Far East Mercantile Company Limited is one of the largest distribution companies in Ghana, with brands like Cadbury, Colgate Palmolive, Guinness, and Unilever, to name a few. Mr. Singh, with Far East Mercantile's core business being in distribution for global FMCG brands, how do you see consumer demand changing over the years in Ghana and the region? Are there different patterns that you observe when comparing the Anglophone and Francophone consumer needs? 2-3 minutes, please, Mr. Singh.
Yeah, thank you. I'm glad that you told me the time frame. So yes, there's a pleasant change. I must say, first of all, there's a pleasant change. The consumer today is more informed. The consumer today is more demanding of what's happening around the world, thanks to the presence of sources of information and everything being online. So today's consumer knows exactly what he wants. The consumer has some expectations, and they are far more informed than roll back 10 years where it was a seller's market and you could put something on the shelf and it will find its way to the consumer. Today, consumers want exactly what they seek. So there's a difference that way. I'll give you an example. Roll back 6 years, we sell Colgate, and Colgate had brought Irish Spring gel soap, and then there's Irish Spring bar soap. Now, bar soap used to be the traditional soaps that people used to use to bathe, and it was accepted, everything was fine. Come gel soap, and gel soap slowly becoming, it's an expensive product. It's not as price competitive as the bar soap, but slowly seeing the share of gel soap going from 1% to 8%, within like growing 1-2% a year, gives you the hope that consumers are exactly upgrading, they're exactly taking what they want, and they are very clear that the benefits of one soap to another is different in formats. So this is one positive change I can tell you, that consumers are upgrading, they're upstyling, they are looking for better products and at the right price. Similarly, into the toothpaste market, you had just the fluoride and the gel and the white chalk toothpaste. So that was what was available. Today's consumer is looking at charcoal, is looking at herbal infused, is looking at a kids range, it's looking at an adult range. So the range has come, the product portfolio has expanded, consumer has more choices, and the consumer is very well informed. And when it's not in stock, they're right up there on Twitter, on Instagram, or anywhere saying, listen, this product is not available. Why is it not coming? And then the pressure comes to bring the product in time. So informed consumer, a more developed consumer is what we are seeing. Now, when I compare to Francophone markets, unfortunately, I have not started selling in Francophone markets, and I'll start doing very soon. But what I can see is I can compare Ivory Coast as a benchmark. The consumer pattern is not very different. Very strong modern trade presence, very strong consumer information available. Consumers are looking for high-end products. I think what is different between the Anglophone and Francophone is A, the language, that is a big barrier. B is the labeling method, the way they do it. And C, I think Francophone, Anglophone products are far wider, and Francophone has a limited spectrum, I would say currently, because not very Francophone manufacturing bases, I guess. But having said that, I think Francophone consumers are extremely well informed, and they are seeking equal value for the product. So a positive, liberating, and upward trend that we are seeing in the consumer space.
And with regards to the recently implemented Africa Free Trade Agreement, what are some trends that are evolving right now in the consumer manufacturing sector, and how is this impacting your business, Mr. Singh?
So it's very interesting, the kind of synergies and the kind of economies of scale that can be developed out of Africa. Today, 60% plus of manufacturing sits in 4 countries. That is Morocco, Egypt, South Africa, and Nigeria. And guess how much is accessed by a country like Ghana? Not even up to that. So it just goes to show that boundaries and trade barriers are doing nothing but not allowing synergies within the country. Now, when you have a common duty regime, a common duty structure, reduced trade barrier, you get more of Africa into Africa. Instead of us going all the way to Vietnam, to India, to China, to source products, you have a strong manufacturing base within Africa that you can tap into, get into your country at better prices, at good quality, and we have the raw material, we have the manufacturing capability. What we don't have is the consumer. So this will give access to consumers, and I think it's a very positive development. I'm really hoping that AFTA come into act and gets into play very soon, so that we don't have to go far and we can tap within Africa and get within Africa.
Understood. Absolutely. Regional integration is a big push as well within the African Development Bank. Thank you. Thank you, Mr. Singh. And lastly, with the region pushing strongly for localized manufacturing, could you comment on recent developments within your company and expected growth areas? For example, in addressing the logistic and supply chain parts of the value chain.
So two things: we strongly believe in manufacturing locally and trying to. So all the distributions we do, we try and encourage the partner company to set up a manufacturing facility with us as far as possible, so that this reduces constraints on manufacturing. But the constraints that we see currently is COVID was a huge wake-up call, where raw materials were not available, packaging materials were coming from far off country. Today, when COVID has been brought down, freight cost, I think Joseph just mentioned, I mean, it's no secret anymore, freight cost has gone to another level. And then I would say within the countries also, you know, Africa, Nigeria and Ghana, that's a 40-minute flight from one place to another. But if you see the rules that of NAFDAC and FDA, they are two complete different levels. So you would be doing a label registration, a nutrient registration, a complete set of registration here and a complete set of registration there. When you get into Francophone Africa, I think there's some level of integration there. So somebody pointed out in the earlier panel that Anglophone Africa needs a common registration panel, where once we register at a common place, it gives access to various markets. And I think trade barriers, I think regulation barriers are things that will, if brought down, will encourage local manufacturing. Besides that, I think Africa will give access to raw material from within Africa and packaging material as well as far as possible. So I think once AFTA comes in place, there'll be a lot more positive change. Within it, I would say that Ghana as a country has developed, is focusing a lot on manufacturing, and we are looking at possible manufacturing opportunities here in Ghana as well. So I see a positive push, but these barriers to trade are things that needs to be addressed by respective countries as soon as possible.
Thank you for those insights, Victor. I really appreciate it. On to the next section. Senegal started manufacturing COVID-19 vaccines earlier this month. Mr. Bediako, could you comment on key developments in pharmaceutical manufacturing in West Africa, especially in light of the impacts of COVID?
Yes, thank you for your question. I think the news of Senegal packaging or manufacturing their own vaccines is highly commendable, and it's really encouraging for Africa. And these are the stories that we would like to hear. And also, I mean, the fact that, I mean, that perception that it's not possible in Africa, I mean, Senegal has been able to prove that, and would like this to be extended to other African countries. I mean, if you look at West Africa, especially maybe Ghana, Nigeria, about 70% of the products that are consumed are imported, as against 30% that is locally manufactured. I mean, I remember, I mean, when COVID hit, I mean, Ghana, and I'm sure some other parts of West Africa, it sort of disrupted the supply chain and, you know, the lifestyle as well. I mean, remember, there were certain essential products that we needed from Europe and some other countries that embargoes were put on them that, I mean, we couldn't have access, I mean, to have these products, essential products in Ghana. So it sort of forced us to innovate. I mean, previously, for example, my company, we were manufacturing sanitizers and some other supplements. I mean, that way we were highly reliant on Europe, but it forced us to innovate. I mean, where for the first time we were able to manufacture our own sanitizers and help meet the local demand. And we you know, set some of the supplements that we needed as preventive medication for or treatment for COVID. You know, we were able to manufacture some of these things. So, I mean, that spirit of innovation. COVID has brought that. And even in terms of trends, we gradually see a slight shift in favor of local manufacturing. There was a perception that products that are made in Africa are not of good standard, but I mean, that has always been a wrong perception. With the emergence of COVID, people have come to trust locally made products. So you see that gradually that 30% is gradually shifting, towards 35%. And I'm sure very soon 40% we are targeting eventually that 70% of products that are consumed in West Africa would be locally manufactured. So gradually, I mean, there's investment in and innovation, investment in high tech that is helping us take towards that 70%. It will take some time, but we are, as NS Chemists, as I mentioned earlier, we are also investing in new facilities. The local regulator is helping us, and other manufacturers in Ghana as well. I mean, towards a roadmap, a framework where most of the facilities over here will be WHO GMP certified. And once we have this certification, that perception of quality would be raised in the minds of consumers, where people will have the confidence to procure locally. And we believe that with the right technology, I mean, we can follow suit with what Senegal is doing. I believe Nigeria too, they're also setting up facilities where, I mean, they are ready to partner multinationals to fill and package vaccines as well. So, I mean, there's a lot of investment. That's one of the developments that have been going on. There's government support the past few years in local manufacturing to establish Ghana, for example, as a pharmaceutical hub in West Africa, because there's a perception that, products, made of high quality. Of course, because of lack of technology, we are not able to, hit the targets that have been set for us. So, I mean, innovation, investment, it's some of the key developments that have taken place in the pharmaceutical manufacturing space of late. Yeah.
Thank you, Mr. Bediako. What a fantastic opportunity to sort of like really ramp up local manufacturing and to increase the share of what we consume and we produce internally. At AFTB, that's one of the things that has gotten us excited in terms of the adversity that we have faced within the past year or so. Just the sheer opportunity that is coming to the table here. And my second question was going to be exactly related to that. Sort of like, what do you think can be done to ramp up local pharmaceutical manufacturing capabilities? You mentioned innovation, you mentioned investment, you mentioned government support. I think that those are all great. Anything else you'd like to add there?
Yes.
In terms of, go ahead.
Yes. So before I come to the other points, even though I mentioned investment support, has been trickling in. I mean, definitely it's not been bad. I mean, but there's more room for improvement. Because, I mean, these days to acquire the kind of technology to make cutting edge products, I mean, and innovate, you need a lot of money, I mean, to be able to partner even contract research organizations, you need a lot of money. So I think organizations as African Development Bank, I mean, we don't know what form they can come in to sort of like support our local industries. Then also, I mean, we have areas like data. We don't have a lot of data. Across West Africa. I mean, sometimes people are really reluctant to share information, so the data is a bit scanty. So, I mean, trying to research, I mean, and going to develop research and development is quite difficult. So that's an area we need to look at, getting reliable data and, investing more in research and development. Of course, the big barrier is finance, even though we've seen a lot of improvement in the past few years. I mean, assessing affordable, I mean, what I say, maybe affordable or cheap finance, with low interest rates, with a longer tenor, I think that has been one of the challenges local industries have had, but we have seen an improvement in the last few years, and we hope this trend continues. So the other ones are innovation, research and development, and data not being available. And also we need to, I think we need more skilled labor. That's one of the areas that, we are investing in training and developing a human resource. it takes a lot of work to do that. And we are trying to find ways where we can link up with academia to help strengthen that base as well in skilled labor. Yes.
Thank you. Thank you very much. Fascinating stuff. Thank you, Mr. Bediako. Mr. Akkad, moving on to the next section, what are the recent developments in the automobile manufacturing side of the business in the region? And is COVID a significant factor? Is it playing a role at the moment?
Well, the automobile manufacturing in Ghana is new. New in its second phase. There was an automobile manufacturing in Ghana first in the 60s when Auto Parts Limited was the pioneer as well in manufacturing. We were the first assembly plant assembling Nissan cars in Ghana in 1968. And then, unfortunately, due to developments at that time in 1979, the manufacturing had to stop. And the trend of business of the car industry has changed to trading. Now, in terms of the COVID, you know very well that the car industry is always the first one that is badly hit when it comes to any economic restraint or any economic changes, especially when they are negative. We definitely were hit in a big way in that sense, but it is an opportunity because of the new introduction of the auto policy in Ghana. It was a good opportunity to restructure and to plan properly and to prepare properly. The good thing is that Ghana has controlled the COVID in a positive way, and that it did not affect it a lot when it comes to the spread of the disease, and the government had a control on the whole situation, and they could open the market again. Definitely, when it's open, it's not open to the 100% capacity, but we are still at 50% capacity when it comes to trading and to the economic activities in Ghana. So that's the main issue when it comes to your question.
Understood. Thank you. What kind of automobile needs are being addressed via localized manufacturing setups in Ghana, Nigeria, or the rest of the West Africa region, would you say?
As I said, really there are lots of needs, and the Ghanaian government has really taken the right move to start with. There is nothing that can be done, and President Nana Akufo-Addo with his cabinet decided to get involved into the automobile industry, and because they saw that it is one of their biggest, how do you call it, cost and something, and then they introduced the automotive industry, but then no industry can go without a proper auto policy. And an auto policy has been put in place, and it is one of the best auto policies actually in Africa. Without the auto policy, even now with the implementation of the auto policy, you cannot just go and implement it straight without injecting it bit by bit. So that's the main concern. When it comes to the auto industry, you have three kinds of manufacturing. You have the SKD, which is semi-knockdown cars. You have the MKD, medium knockdown cars, or demi-DDK. Some people give different attribution to it. Some demi knockdown, and then you have the CKD, which is complete knockdown cars. Now, when it comes to SKD, the the pallet comes all, and one car comes all in one pallet where you can assemble everything. This is the simplest method, and this is the method where all the current big car manufacturers, including China, including Thailand, all the cars started like that. And that is always like the spark for the investors to come in. Definitely you need the local content to enable you go into the SKD, into the CKD, and this is the complete knockdown. The CKD is much more complex, and it takes lots of much bigger investment, and it needs more contribution to local manufacturing, but this local manufacturing has to be approved by the OEMs, the manufacturers. And that's very important as well for the quality, because we need to protect the brand at the same time. The idea of the African trade it's an excellent idea, because when it comes to CKD, for example, your scope of manufacturing will reduce. With SKD, it's easier. You can put 3-4 models per brand. But when it comes to CKD, you really have you need to develop, you need to assemble or manufacture much bigger number. Talking about more than 150,000 cars, 200,000 cars, and that is where the exchange across the borders has to come on.
Understood.
Many aspects stop that, but it is the right way to start anyway.
Okay, and Subi, let me be a little bit cheeky and ask my last question about electric vehicles in West Africa. What are your thoughts, and how is auto parts preparing itself to tap into growth opportunities here?
Electric vehicles, it's a fait accompli, as we say. That's the word. It's something which is happening in the world, and there is no turning back on that. I can explain it in many different ways. First of all, just to give you an example, everybody say, oh, Africa, it will never happen there, or it will happen after 10, 15 years. I don't really agree with that. I can give you a pure example. When the telephone service, the mobile GSM was introduced around the world, you know, GSM came out from the Scandinavian countries. And the first two countries after the Scandinavian countries that applied the GSM services were South Africa and Ghana, before any other country in Europe. Why? Because Europe has already the old infrastructure, and to change from one infrastructure to the other infrastructure costs lots of investment. So that's why it's easier sometimes to implement the the electric cars into countries that are green, rather than countries that have gone steps and they need to change the cable, the power, and everything. There is no turning back on electric cars if we want to protect our planets and if we want to stay in the scope of the car industry. As you know, the car industry is not easy, it's very complex. That means that we are in the combustion engines at this time. We are into mass production. The mass production keeps the pricing a little bit lower than that's why you see the mass production, the big manufacturers always have got better pricing and more affordable pricing than the ones who produce less volume, as you might know. In that sense, we have to look at different scenarios. Scenario number one is, yes, it will take time to put the infrastructure in Africa for the assembly plants. But then again, for the electric cars, sorry. But then again, what are we looking at? All those cars that are being manufactured now are minimum, they can cover minimum of about 250 kilometers per charge. Some of them go up to 500 kilometers. How many kilometers do we do a day? So it's not so complex when it comes to the implementation of the electric cars industry. But at the same time, there is a much faster implementation in the Northern Hemisphere. With the faster implementation in the Northern Hemisphere, that means we have two things that are emerging now. Number one is less production of combustion engines by the main manufacturers. And number two is those spare parts manufacturers that are all around the world, wherever they are, in the developed countries where they manufacture spare parts, will get to the point where their production will reduce. And the best way for them to survive is like you have somebody very badly hit with the COVID, and you go and give him all the IVs and everything to give him an external life or extended life, or you're talking about somebody who has who does a heart surgery to give him 20 more years or 10 more years. This is where the opportunity comes for the manufacturers of spare parts around the world to move into Africa, because Africa still will rely a lot on the combustion engines, and they cannot just eliminate it one day to the other. So that's a very big investment opportunities to come in and manufacture locally in the countries. In a continent where the population is growing very fast, the population is young, the continent is very rich in minerals and everything. Actually, Africa has it all for people to move in here. So that's the situation. But again, the electric cars will happen. Electric cars is going on. Part of our group, as I said, is Porsche. We are already with Porsche in an advanced preparation to introduce electric cars in Ghana. There are prerequisites for us to prepare before we can place orders. Part of them are to fix some charging stations within the city first, and then to extend it to neighboring cities, taking into consideration the coverage of the car, or the coverage of the charging batteries can do. We have already installed 6 stations in Accra, at 3 at key points, 3 in our premises. We have already started training our staff for the electric vehicle maintenance. We have the spare part, the tools, special tools that we need to put in place. We have them in place now. We need to create a quarantine area, because when it comes to the car, to the lithium battery, if it's a little bit hit, we need to protect the environment and submerge a car totally by water, which we call it the quarantine area, to neutralize the battery. So all these things have been done. We left only finally with the completion of the training of our technicians, and based on that, we can order the electric cars. Volkswagen are very much interested. Yes, indeed. Volkswagen is really interested. We had the CEO here visiting us a couple of weeks ago, where we started this discussion very seriously as well. Definitely, we have to look. We cannot just bring any electric car to them for you. But still, you need to have good routes to drive in electric cars, and specifically because the batteries are placed in the lower area, and to create those ramps that are created in a way or in a highway, they may damage the car. So Volkswagen more use very, very fast in that sense. in terms of the ID cross ground clearance. So that's something serious. We have approach as discuss the leaf, and the leaf is one of the biggest seller as well in the world, and we really are interested.
Merci beaucoup. Merci, Subi. From this discussion,
every government has
from this discussion, I think that we've had some technical difficulties with Mr. Akkad, but let me just say that from this discussion, it is clear to me that manufacturing opportunities are on the up and up in West Africa. From COVID-related pharmaceutical developments to the rise of the electric vehicle in the age of climate change, to the opportunities presented by a rapid demographic transition, the spotlight is currently on Africa. Please join me to thank and congratulate all the panelists today. Thank you. Any questions from the audience? We've reserved a few minutes for this Q&A. In asking your questions, kindly indicate your name and affiliation and whether you'd like to pose a question to a specific panelist. Thank you very much. Huda, over to you.
Sorry, Zoom dropped suddenly. Sorry.
Oh, yeah, no problem, Mr. Akkad. We were just moving on to the Q&A from the audience.
Yeah, just one more thing to add, if possible, just to finish my my interference here, and that is it really has. I mean, to introduce electric cars in Ghana, we really need, in Africa in general, we really need the support of the government in the implementation of incentives for those cars. After all, what we are protecting the environment, we are reducing the use of the fuel, and all this kind of related issues. So it's quite important to do that. And definitely the last thing that we really have to look at is the status of the financial institutions in Africa, which are really still not mature like Europe, like the US and other countries in terms of their contribution when it comes to the car industry, especially in English-speaking Africas, where the interest rates are out of the world. Thank you.
Thank you. Thank you, Mr. Akkad. Just moving on to the Q&A, I see a question on how are the various companies tackling counterfeit goods in the market? Maybe this is something that can be addressed by Mr. Bediako.
Yes. I mean, in Ghana, I mean, if you look at Ghana, counterfeit, the counterfeit issue is not so much of a big issue in Ghana. I mean, because our regulatory body, the FDA, is very, very strict. I mean, they go through a rigorous process before they approve any product. So they almost do like maybe 80% of the work for us. And also, I mean, for companies like us, before we put any product on the shelf, we have to make sure that the FDA stamp is on. And and even these days, if you're marketing a product on TV, you have to put that this product, label it that it's been approved by the FDA. I mean, in some other countries, like in West Africa, there are companies that are using technology to combat this, where sometimes on the pack of the medication, if you scratch the side, there's probably a number, a code that you could maybe put that code into your phone, then you get like an SMS alert whether this product is registered or not. So these are some of the, I mean, tools that are being used to tackle counterfeit in Ghana. But in Ghana, it's not so much of an issue, I mean, in Ghana, probably compared to maybe, I don't know, maybe other countries in West Africa. But the regulatory people have done a very good job in helping to minimize this problem in Ghana. Yeah.
Thank you,
but
you,
we
Bediako.
also,
and they just moving on to the. Sorry.
So not to say that. So we welcome new technology. You know, I mean, from Singapore and other countries that would help us even tighten up this area. That's what I was going to say. Thank you.
Understood. Thank you. And this might go for Joseph. What are the constraints and challenges to introducing new products into West Africa? Joseph, could you comment on this from your end?
Yeah. Yes, the challenges are very clear. First of all, technology, cost of technology is one of the biggest areas. And like I mentioned earlier on, you need to go for technology for which there will be after-sales support when it comes to interventions. The other one is the availability of locally trained resource to be able to manage whatever technology you put on ground. Utilities is another big challenge. I can give you one example whereby recently one of the beverage manufacturers set up in the middle part of Ghana, massive multi-million project. However, they are currently having challenges with water supply. Now, this is quite difficult to appreciate. On top of that, we are beginning to see a lot of issues with electricity supply as well. Cost to serve is another area of challenge, quite high. Let me give you an example. In Sierra Leone, recently, our company got a third party to produce beverage per case of about $5. And when we asked for freight and you add on top of it the duties to get it across to Banjul, it costs you over $10, literally adding more than how much it costs you to produce it on top of it. And so you can imagine how difficult that is. So logistics is a very big challenge. And in fact, in so many cases, shipping services are even not available to be able to move your product across borders.
Yeah.
Yes. And then the other one is within the region, people, in terms of dependency on offshore suppliers, that is becoming a very difficult one because of the exposure to Forex, and manufacturers who start up will have to think more about how they can depend on local materials. Currency depreciation is very key. Another key one has got to do with the strength of the unions and industrial related issues. You need to gear up for that and be ready to partner with the unions in order to be able to make it in this particular terrain. And I believe that cuts across most of the West African countries. Thank you.
Thank you, Joseph. The next question is going for Vikas. How competitive is manufacturing consumer goods locally versus importing? What are your views here? And are there tariff protection at the moment?
So getting goods locally versus importing currently, there are specific sectors where there would be tariff protection. For example, in cocoa beverages, the cocoa beverage importation charge is very high, whereas locally produced beverages are far cheaper. So my views is that there should be more and more localization. There should be more and more local manufacturing, and the government should incentivize the process. Joseph, in his challenges, mentioned everything that is there as a challenge to manufacture locally. But let me reiterate, cost of finance here in excess of 18%. Sourcing local talent and developing them. Apart of that, cost of utilities, electricity cost is very high, power cost is very, water cost is very high. So by the time you add, then the duty and tariff structure itself, the government needs to work on rebate structures that would. Recently, the government announced a rebate on raw material and packaging material, which is a welcome development. So I think if more and more efforts are put towards giving more subsidies and incentives to local manufacturers, I think localization will help, and it will create more job opportunities. It would allow products on a sustainable way to be provided, and there would be no stock out situations that the way it currently happens. And I think localization is the way to go. I just mentioned about protection. There are protections in few industry, but then I feel as we go forward, protection should be increased, like we saw in Nigeria and other countries where local manufacturing is the mainstay now, and importation is being discouraged. I think as and when the opportunity rises for various sectors, that should happen.
Thank you. Thank you very much. And sorry,
if I may
please go ahead.
just 2 points, what Vikas has said. I think mainly localization is the way to go. You will not believe that you will have products situated in Guinea or in Senegal, want to move that across to Liberia or to Sierra Leone, it will take you 44 days to move that across. Okay, and these are just a few kilometers apart. Okay, so that is very key. Secondly, I don't know how it's going to work out with AFTA, but the point is that even with ECOWAS at the moment, we have a situation where some countries either respect it and then give the benefit to importers. In some situations, they will honor it. However, they will introduce another tariff, which is more of a local protection tariff, which tends to negate the benefit that you get through ECOWAS. And I hope that with AFTA, this situation is going to change. But generally, when you look at it, the cost of moving goods across borders is so high that localization is the way forward.
Absolutely. Thank you for that, Joseph, and thank you to all the panelists. I'd like to give a very special mention to Enterprise Singapore for convening these panels. And again, thank you to the audience for the very lively Q&A. These are fantastic questions, and I see that Jean is still typing some responses to some of these. From me, just to say it's been a pleasure, and good morning to you all. Thank you. Over to you, Jean.
Thank you so much. Thank you.
Thank you very much, Fernando, and to all our panelists, thank you so much for spending the time with us and for your valuable insights contributing to this panel. So we've now come to the end of today's webinar session on West Africa. We hope that the two panel discussions have helped you understand more about the developments and opportunities in the region. If you have any further questions or would like to get in touch with the Enterprise Singapore team, feel free to reach out to the West Africa team where our contacts are being flashed earlier. So it's the slide before this. Or you can reach out to my colleague Huda. I mean, you would have her email address because she's been the one that's been in contact with our attendees with regards to the Zoom links. So do feel free to drop us a note. There we are. Here we go. The contacts are here. And lastly, let me draw your attention to two key events that are just around the corner. Firstly, the Africa-Singapore Business Forum will be taking place on the 23rd and 24th of August. So this edition will be fully virtual. You can scan the QR code, which is now flashed on the slide for more information. And the last event to wrap up this series of webinars under the Africa-Singapore Business Forum webinar series will be the opportunities in North Africa, which will be held in September. So do look out for further details that we will be sharing very soon. Once again, thank you everyone for your time and participation, and I wish you a good rest of the day.
Thank you.
Thank you.
Thank you. Thank you.
Thank you.